What's up, guys? If you stick to this trade to the end, you will know how to analyze and how to enter precise and unique entries using order blocks and breaker blocks. Let's dive into it straight up. Now, we we have so many types of entry patterns. We have we make use of the breaker blocks, the order blocks, fair value gaps, mitigation blocks, and all that. But I'll be narrowing down to just two type of entries. The common one we have, right? And I will be using the breaker blocks and the order blocks. Now, the breaker blocks entries are these are entry patterns where we see like a break of structure, right? We see a break of structure, first break of structure, right? And also the second break of structure. Then the market now coming to this to the order block to come and do what? To come and take the entry. Right now, the first break of structure is the one, maybe it might form something like another block, right? So the second break of structure will be serving as our inducement, and now the price will now be coming back to sweep this second break of structure and also tapping into the first break of structure. So this is how I illustrated it. Right now, this is a sell type formation entry. Right now, we'll be having something like this. Now market is trending to the downside, right? Now market formed something like this, right? Broke structure. What will market do? Because market moves from internal to external structure, right? Taking all the liquidities at the external and the internal range, right? So the market will come back and take this liquidity, because there are also liquidity resting. It will take the first liquidity and use any order that is stacked around this area to take the first liquidity and start pushing down to the and start selling as it supports the initial trend. And this type of entry is actually very very precise and very very accurate when the market is in line with your trend bias. That is, maybe you have a kind of a bias. Maybe you have a bias of a sell bias, right? Now, if you see this kind of entry, it is it's almost precise, right? It's always accurate. It doesn't miss, right? So it is a very very high probability entry. Now you'll be spotting the order block around this area, right? And you'll be taking your entry. Now the second one I have is when you are having your buy signal, right? Now when you have already established your trend, you will now be going into the what? You will now be going into the lower time frame to look for entry patterns like this. Now you will see the market doing something like this when you have a first break of structure, right? Now the market comes again, not stepping into it, right? Just come very very close to the order block or the POI, right? And market breaks it again. Now the market will now come to do what? To sweep the liquidity resting below or above the this area, right? The market will be coming back to sweep those liquidities, then tapping into the area of value, that is the order block, and now doing what? And now buying, right? So this is the type of entry that I always look up to when I establish my bias from the 4 hour or even the daily. Right now, you'll be seeing something like this kind of order block, then you now pick an entry. Right now, so let's dive into let's see some kind of examples here. Let's see some kind of examples. Right now, this is like this is like a prime example of what I actually explained. Right now, the market did this, right? Came back, did something like this, and now he came to take this liquidity resting above here and tapped into the order block around this area, right? And now did what? Sold to the downside, right? Now let's look for some other type of entry. Maybe we'll look for let's look for buy. Is there any place we have similar entry pattern like this? Okay, we have one here. We have one here. We have one here. Right now, you could see this area. You could see this area, right? Now, it formed something like this and created like an inducement, right? Now the market broke this structure, right? Now the market now came back to sweep this liquidity and now tapping into the order block around this area and doing what did it do after this one? It sold, I'm sorry, it bought to the upside, right? So this is the type of entry, signal, right, you should be looking up to. Now the second one I have on my list is the breaker block entry. Let me give you like an example of it. Now this type of breaker block entry happens when there is like a very very high volume in the market, right? Now this type of breaker block entry, it happens when the market does not like, it does not want to, you know, um the market is already exhausted to come into the extreme area to tap into the order block. So it would use a failed order block. A breaker block is just like a failed order block, right? Now let's take for example. I'll still show you a chart example, right? Now maybe we have um let's say this is an order block, right? So instead of market to tap into this order block and start moving to the upside, right? Market broke through it, right? Market broke through it, and what now happens? This thing now becomes a failed order block, and that is what we call a breaker block that has been broken. It is no more an order block. Right now, the best way to enter into this trade is when you see something like this, a form of liquidity around this area. Then market will now come back to sweep the liquidity and tap into the breaker block. Then market will do what? Market will sell, and this is like a prototype of what I drew here. Right, this is like a failed order block. Right, instead of market to tap into this area and continue pushing to the upside, market broke through it with the impulsiveness and high volume of the candles. Right now, the market broke into it and did what? The market created something like an inducement, and now instead of the market to push through and go and tap into the extreme order block, it does not really have so much time like that, right? So it will just look for any other PDRA, that is the breaker block. After sweeping this liquidity, the next thing is to just tap into any order that has been stacked before, right? Tap into it and just push to the downside. Same thing applies. This is for a sell signal, right? If you are looking for sale, and this kind of entry are very very important. This kind of entry are very very important. If you follow the trend, they will surely play out. If you follow the trend of the market, right? They have higher chances of playing out if you follow the trend. But if you counter trend, you might take some kind of losses, right? Now the second type of entry is also the breaker block. That is, you have this type when we are actually buying. Right now there is a failed order block. Instead of the market to tap into this order block and push to the downside, right? Instead of the market to tap into this order block and push to the downside, it did what? It broke through it impulsively. Now creating what? Creating a sort of inducement around this area and also breaking through it. Now the market, in order to continue its trend, it comes to sweep the liquidity and also taps into the breaker block. Instead of it coming here, it doesn't necessarily need to come here again to come and tap into the extreme order block, right? Or even the fair value gap around this area. What it actually needs is the inducement. It actually needs liquidity for it to come and tap into this breaker block. Right now, let's see some kind of chart examples. Now, we have a breaker block type entry here. Let's see this one. Now, this is like a breaker type entry, right? So this is like an order block. Now the market broke through it impulsively and it started moving to the downside. Now it did what? What did it do here? It created something like what? An inducement. A liquidity, right? A sharp high, right? Now the market did what? After that, the market did what? The market came and swept the liquidity and did what? And came to tap into the breaker block, this breaker block around this side. Right? Instead of the market coming to tap into this zone, it does not necessarily need to do that, since it has actually swept liquidity. The next thing it does is to do what? Is to tap into the breaker block. Now let's see this one. There is also a counter trend breaker block, but all these kind of counter trend are not 100, like they are not of high probability. Though it works, but they are not high probability. You don't have to be. If you are a risky trader, you will take it. Now look at this one. Now. This is like an order block resting here. Let me delete this. This is like an order block resting above this place, right? Now the market did not tap into it to the downside. It did what? It broke through it, like it broke past it impulsively. Now the market now did what? It created a sort of inducement, like a pullback. Created a sort of inducement. What happened after it created that inducement? It broke structure. Then what happened? Then the market came back again to tap into what? To tap into the breaker block entry. Look at today's trade. Look at today's trade. Look at how impulsive the candle was, right? How impulsive the candle was. Now the market impulsively broke through this order block. Now the order block now becomes a breaker block, right? Let me tell you this. The other block now becomes a what? A breaker block. Now, and it created what? It created a sort of inducement. Created a sort of inducement now. Now inducing price to do what? Inducing price to come and tap into this area, right? It induced price to come and tap into this area for a sell. What happened when it tapped into this area? It tapped into this area, and now the market now began to sell. Now the market has made over 80 pips, right? So these are the types of entry you can incorporate in your trading, right? Please, if you love this video, if you find it helpful, please do well to subscribe to my channel. I remain Johnson.